Welcome back, folks, to another FEX Insights episode. This is episode number 12. We're going to cover some really interesting insights, including someone as a guest who's worked in the DeFi space for a little while, has a background working at Maker, and is now located in Australia. So you'll hear from Will soon. But now we're over to the news. Next up, we're covering this article from Citigroup. So as we can see here, Citigroup eyes a stablecoin custody and payment services. Reuters reported that Citigroup is exploring new crypto services in light of evolving US regulation. The bank is considering providing custody for high-quality assets underpinning stablecoins, i.e. US treasuries, and cash as well, and developing stablecoin-based payment solutions for improved settlement speed. Moreover, Citigroup is assessing custody solutions for crypto ETFs and even contemplating the launch of its own stablecoin. And you can see all of that in this article here. So there's a summary. They also highlight things that have been said from a McKinsey study and others, and you can check that out here. Another Reuters article here, and this one is all about the company's plan for stablecoins under the new law. Experts say that there remain some hurdles, but let's take a look. So we can see here that the Genius Act set federal rules for stablecoins. Stablecoin uses cases vary from retail to cross-border payments. Private blockchains are also appearing. They're appealing to banks for stablecoin issuance. They're talking about that as corporate or corpo chains, corporate blockchains. So we'll see more about that in some other news articles here. But in this one, we see that financial companies like Bank of America and Fiserv are preparing to launch their own dollar-backed crypto tokens now that the new US laws are in place through the Genius Act, coinciding with also the Clarity Act. So very crypto-friendly over there. We can also see here the use of stablecoins designed to maintain a constant value, as that's to the 1-to-1 US dollar peg. It's exploded in recent years, and we know more about that from being in this space. But what's interesting is that the institutions are the ones that are now the majority users of stablecoins. It used to be retail, but it is now more like 60-40 and rising in institutional favor. And then amongst the companies that are considering stablecoins, we see Walmart, Amazon, the Wall Street Journal reported in June. So more on that in this article. Further on the stablecoin news, there was a podcast from the guys at The Chopping Block. I put out this LinkedIn post just today on that. You can see here. If we click on that, you can see the guys talking about, you won't see or hear the video on this one, but you can check out the links below. But they talk about Circle's Arc, Stripe's Tempo. These are those corporate chains that we mentioned in the earlier news that was there before. So as I highlight here in this LinkedIn post, I think that it's more about seeing things like pragmatism versus purism. There's a lot of complaints about these corpo chains not really being in the essence of what blockchain's about. And then also highlighting things like utility versus hype, what lasting value really means. Coming from real world use cases, think supply chain tracking or on-chain trade finance, not just spec meme coins. And also having composability and interoperability. Siloed chains are a bit of a backward step, so moving more towards public and open, and stablecoins as native assets. Using stablecoins for gas fees or settlement makes sense, but only if there's liquidity, compliance, and interoperability. Otherwise, it may just be another self-contained loop. So we've moved beyond talking about organizations and even countries trying to get in with CBDCs. There's now more of this embracing of public. There were complaints before about private, but when these things that are coming from the corporates are smelling very much like public blockchains, we need to pay attention. In other news, we see Ripple buy into Rails in a $200 million deal. So they buy into the stablecoin platform via this deal. And it says here in this Financial Times article that they've agreed to acquire Rails, a stablecoin infrastructure company, in a move that will bolster Ripple's stablecoin ambitions and follows the passing of landmark US rules, as we mentioned before. Last month, they passed the Genius Act, and now stablecoins, types of these digital currencies. All of these articles will always explain what they are because it is still new. You might have noticed that in previous weeks as well. There is that explanation of what they are, the one-to-one backing digital programmable tokens, and all about Project Crypto. But yeah, another interesting acquisition in the growth of stablecoins. Another thing that you might have missed during the week that just recently happened was the Bullish IPO. So Bullish, the research firm that owns CoinDesk, there is a lot of research and trading, and they're an exchange, things that happen on there. They've also IPO'd amongst others like Coinbase, for example. So the Peter Thiel-backed crypto company went public on August 13th. You can see the announcement there, the flag flying over the New York Stock Exchange. And activity showed that there was a really big increase in IPO prices this year through August 13th, 58% increase from the prior year. And you can see Circle and even Figma, whilst not crypto, but has been spoken about highly in terms of the IPO space. Following the footsteps of these successful offerings, Bullish is going under the ticker BLSH. It's the Peter Thiel-backed cryptocurrency company. So how much is the Bullish IPO worth? Its offering price is $37 a share, above the previous range of 32 to 33, and this gives the company a market value of $5.4 billion. So as it opens and as we see the news and trading come out on that, we'll be tracking and seeing how successful or not successful that may be. Another one that we've got here is seeing more of the banks pour money into the Bitcoin space, especially for Bitcoin liquidity and treasuries. So $100 billion into blockchain infrastructure since 2020. Banks have invested over $100 billion between the periods of 2020 to 2024, participating in 345 deals globally. Citigroup and Goldman Sachs led with 18 deals each, and followed by JP Morgan and Mitsubishi UFJ with 15. So all of these talk to that need for more Bitcoin type liquidity and infrastructure and rails, and more of the corporate focus on that. And we'll see more of that in this next article too. And speaking of Bitcoin liquidity, I think what's important here is to highlight this white paper that was created by the guys over at Redbelly. So it's an update to their existing white paper. In the new one, they focus more on AI and AI agents and how blockchain fits with that, but then also Bitcoin liquidity. And we spoke about that in this podcast with Matt Hale for the Redbelly Insights podcast on Thursday, which just came out yesterday as we film it now. And we spoke about the white paper, Bitcoin liquidity, what that means and why they are doing it. There's a lot of value to unlock is really the main thing, but making that easy to do via Redbelly is the key, and all the other things that come along with that, such as the KYC and AML compliance type stuff, the privacy features as well, and being the first blockchain to be, or the first public blockchain to be used as part of a CBDC test by a central bank is really important. So keep an eye out on that one. And if you haven't seen the Redbelly Insights podcast, our sister podcast, you can see that right here. That's it for the news this week, folks. Let's get over to the interview. Welcome back, folks, for another episode of the FEX Insights podcast. And we've got a special guest on here, dialing in all the way from Melbourne, Will Remor. How's it going, mate?
Hey, mate. I'm doing really well. How about you?
Yeah, very well. It's been a while. I saw you at the D conference up on the Gold Coast. So we were there feels like a few months ago. Maybe it was only a few weeks ago. There's a lot of stuff going on there. But yeah,
maybe 2 months ago, I believe. Now it's it's been a little while, and lots of things actually have happened since then. So time flies by. Yeah,
I was going to say, in the crypto space, it never sleeps, right? So that's great. But just to tell the audience a bit of background about you, can you give us a bit more detail about who you are and your background?
Yeah, so I originally quant in the risk in the credit space, like in previous reincarnation, previous life in the before Web3. TradFi space, and then I moved on to work with smart contract engineering teams in the very first generation of like the Ethereum ecosystem, 2016, 2017. Worked for a auditor firm, auditor and consulting business in there, kind of in the very low level of the infrastructure that was still not there at that point in time, and then that actually gave me quite a bit of extension into some of the very first generation of the DeFi protocols that were coming out of white papers. And the first one was actually Maker. So I joined there as the second person within the foundation for the quantitative team, and built the very first model that is still powering actually the vast majority of risk parameterization within the Maker ecosystem today.
Wow. Okay.
Then we evolved from there. We spun off after kind of like raising raising the very first kind of like tranche of issuance in the transition from single collateral DAI to multi-collateral DAI, and then spun off another team on the RWA space that was essentially going to extend, I guess, the breadth of like what the Maker ecosystem was already doing back then in end of 2019 in the Web3 native assets with real world assets, and then did a whole bunch of legal engineering there. I did also, like in the meantime, architected a fiat-backed stablecoin for the New Zealand digital dollar for Easy Crypto that has been recently acquired by SwiftX. And over the last 18 months or roundabouts, being involved in a next generation of a BTC-5 protocol that we took from the ground to launch again as a DeFi protocol. So back to the principles of building is smart contract focused ones, and not so much kind of like RWA stuff. And but it's still very much involved in quite a few actually projects in the RWA space.
That's really interesting, because I remember you were still with Maker, or consulting to Maker or working with Maker in terms of the quant work that you were doing, and that's where we first met. And really interesting because myself and Arturo more so comes from a quant background. I did a lot more statistics, equity research, but getting into the quantitative side of things, especially with a lot of like analysis of equity markets, of macroeconomics and stuff, and more on that, like the equity side rather than credit. But, respect to all our fellow quant folks that are out there that still, run these workshops and have a whole heap of events, Marcos Lopez de Prado, some famous names in the quant space that I still follow and watch, because it's all about numbers, right? And, the thing that you mentioned there, like people may not know this, that like you said, RWA was being looked at back in 2019 and probably even thought of earlier. This is not a new thing. Yeah.
No, even earlier than that. I mean, it's just that actually the name RWA, the acronym RWA, which actually has become RWA. I sometimes actually think that it might have come actually from my team, but I don't want to say that necessarily, because we started actually talking about that in RWA terms within MakerDAO. But before that, it was the generation that people used to call STOs, right? Security token offerings. In the previous generation, and that was the very first actually project within that, which was within the Commonwealth Bank in Australia. The CBA was doing they did a deal with in a private Ethereum network with the World Bank in 2017, and I was actually involved in that project. But we didn't call RWA at that point in time. It was just STOs, and there was a whole bunch of kind of like ecosystem of players in that RWA at that generation, like Polymesh, T0, and a few others. That today they are not big brand names, but people that have being involved at that point in time, looking into that stuff, definitely would recognize some of those names, especially T0. T0 was actually a big name at that point.
Fantastic. Well, you've got definitely the pedigree. There's a whole lot of war stories, I'm sure, that you could share with us at some point. But and we'll dive into that. But the interesting I find now is that you've remained involved in the space. You've moved from New Zealand now over here in Melbourne, sunny Melbourne. I don't know what the weather's like there, but if it's like Sydney was okay today, but we have our ups and downs with weather. How is it settling in Melbourne and being in the blockchain ecosystem down there? How's it been?
So it's been good actually. Having moved here, I guess the funny thing that I'm finding, not only in Melbourne, I think across Australia more generally, you have a whole bunch of people that have been involved in some shape or form with some big infrastructure or DeFi projects globally. But they are kind of like operate within those communities and not necessarily related to the local kind of like geography of Australia. That's what I found. So I've met people kind of involved in some of the top Ethereum projects, top Arbitrum projects, top Solana projects, top infrastructure related projects like staking and restaking, across some, like both Melbourne and elsewhere, but they don't necessarily relate locally. They actually relate to their global communities as more like global citizens. And I would like to think of myself, I'm kind of like part of that cluster. But surprisingly enough, they don't turn up actually too often actually to some of the local local stuff. So I've seen them kind of like in a meetup here and there, and then actually had catch-ups outside of meetups with them, but they don't turn up very often to things. And there's a lot of smart people actually locally doing global things. Yeah, so it's quite interesting, quite an interesting dynamic. I had that same feeling when I spent quite a bit of time in Europe as well. Like the pirates, kind of, they're essentially operating out of their neighborhoods, and they catch up with the people that are in the same cluster, but they don't necessarily kind of get involved into the wider kind of, national discussions and stuff like that.
Yeah, it's kind of like the cypherpunk sort of, mindset with things.
There's still very much a little bit of like that group, and that culture is very, very strong. Has evolved over time. People that used to be very very conservative in terms of the way that they actually used to approach others, they have become a little bit more more okay being more public figures and things like this, but there is still an underlying kind of like a cipher community out there. Yeah, for sure.
Interesting stuff. And I'm sure that some people will have stories about their things that they're seeing in that space, because it's like, we see the stuff that's visible, but like you said, there are some people out there that they're very big in the space, but they they are more those global citizens. Speaking as a global citizen as you are, what are the kind of things that you're working on at the moment? What's your area of focus right now?
So over the last about 15 to 18 months has been very much kind of like, I discovered a whole internet culture and a group of projects that were related to the BTC-Fi ecosystem. I didn't know that actually existed, to be very honest with you. Like, I didn't know that people were building things on Bitcoin, that people were trying to do anything other than kind of like, wrappers of BTC. I discovered a whole community actually doing that stuff over the last little while, which, interestingly enough, didn't talk or didn't have extensions towards the Ethereum and EVM communities or others elsewhere, right? It was very much kind of like, it's kind of like doing its own thing. Some projects have been around for a very, very long time, and I have seen them kind of like in 2017, 2018, but they still continue to build kind of like in that BTC-Fi kind of like community. A clear one is Stacks, which was one of the first kind of like ecosystems for launching dApps. And they're still building. They still have a committed kind of like group of people around themselves, and there's been, of course, quite a few others since then, Babylon Botanics, etc., that have all been building chains and trying to solve, I guess, hard problems of making BTC, or I guess more like BTC layer 2 chains kind of like programmable in a somewhat kind of like Ethereum like fashion, right? So all of that kind of like ecosystem, I didn't know at all about it, because I, like many people, read the Satoshi white paper in 2016. I started working with it. The moment that I started working with it, I moved straight away to programmability, moved into the Ethereum ecosystem. And I haven't since then hadn't actually looked back or reread Satoshi's words. I had completely forgotten about them. I had just kind of dedicated myself fully to the programmable money ecosystem around Ethereum, but yeah, turns out that there were actually quite a few committed people that have been building infrastructure for the whole time, and a whole new generation that had launched themselves, especially since I think 2022, 2023, when they were seeing that the first bubbling up of like BTC institutionalization was coming around, like beyond, I guess, what Bitwise and some of the guys were doing already in this space. But and then since then, I mean, once BTC was being propped up by BlackRock and others, then everything became kind of like just took a fire on its own, and all of that community became much more vocal, and I got to see some of those guys through I guess the conference, but also like through developer integrations and relationships as well.
Fantastic, and I think it's really important to see that there is this this focus again by yourself and other developers on the BTC-Fi space. We've seen a lot more like BTC liquidity being looked at, because whether it's companies that want to get it onto their treasury or even ETH treasuries, and the TradFi space, guys like Tom Lee trying to get be the biggest holders of ETH, and we see all of these things in the news, but we see actions happening where the corporates are buying into it and stuff, and even the blockchain. So we do a lot of stuff with Redbelly, and Redbelly Network in their latest white paper, BTC liquidity was like being able to onboard BTC and being able to utilize that for various things that they're doing in the RWA space, etc., and on their blockchain, I think is interesting. So it's a very cool space to be in. But where do you see all of this heading? What's the you said this is like the last 15, 18 months for you. What's the next 15, 18 months crystal ball? Like you've been in the space for a while, so you've seen how things work and don't work. What do you think is going to happen? And obviously we're not holding you to this, but like it'd be nice to take educated guess.
Yeah, no, the thing that actually I had already kind of like a hint of that the ecosystem would evolve is now, I guess, turning into somewhat like a reality, the same way that you have in the traditional finance space, investment space. You have kind of ecosystem that are created around funds management industry, be it like primary funds issuance or securitization, hedge funds, etc., plus all the different kind of like financial instruments that are created to make sure that all of those that kind of like the investment space operates and as a well-oiled machine, and people kind of like become much more specialized in one area, say kind of like for forex trading or interest rate swaps trading or bond trading, etc., all of the instruments and industries that are created, they are having their mirror in the Web3 ecosystem right now, right? So, and there are protocols that are essentially focused on solving each of those verticals, and people are getting a little bit more specialized around each of those areas. So long story short, I think I see these evolving towards people becoming much more kind of like laser focused around, instead of like up until recently, people knew things horizontally very well, and they were quite good at kind of like know pretty much everything that was actually happening, and I'm talking about DeFi mostly here, like everything that was happening horizontally from stablecoin issuance to lending, borrowing activity to leveraging to interest rates to options activity, derivatives, etc. You could actually have a very, very good view of all those things horizontally, but because you didn't necessarily have to do a lot of vertical dives. Right now, the vertical is becoming quite deep. So people are starting to, I guess, populate these spaces where they know the most and becoming extremely good at doing that. And I can see that will evolve in that space. And the protocols that are doing that now in each of those verticals that I was mentioning, they are doing version 2, version 3, version 4, and every single version where they are doing those things, they are optimizing, because they are not the only ones anymore playing in each of those verticals. So there's a significant amount of competition as well happening under the hood, and some of the winners are still undecided, to be honest. So it's very interesting.
I think, the start of what you said there, where it's like seeing more rails, the infrastructure, the things that we've seen from the TradFi space that are necessary. And, they've evolved over hundreds of years to get into that TradFi space, because this is the best way to manage risk and money, given the technology as it's evolved at the time. And now we've got this next evolution. We are going to, be seeing a repeat, like you said, of the things and the rails that are necessary in TradFi. So exciting to see that you've got that view as well.
But it's accelerated, much more accelerated.
Yeah.
Like things. So, for example, if you think about like from a basic standpoint, kind of like the bond markets that were primarily kind of like created through post railroads of like the 19th century, and how all of the institutionalization of the bond markets. Just to be clear, nowadays actually bond markets are probably some of the most boring ones from the audience and from everybody that actually looks into fixed income, looks at mostly like whiskey and leather couch type of activity. But in the early days, actually people actually used to call actually the bond markets a scam. Like when it started, right? When the first railroads kind of like started like issuing notes and the like, people used to call that kind of stuff actually very scam. And it took about 100 years for the whole kind of institutionalization and creation of the rails. So actually nowadays, the bond market is probably the most respected of, and it's the biggest of all of the markets if you consider also the derivatives that are associated with it, right? So that's how those things evolve. So in Web3, except that is at a very a much higher degree of speed. So what it used to take 50 years to develop, probably in Web3 develops over 1.5, 2. And then talking about the infrastructure that you mentioned before, because you have so much competitions across the different verticals, for example, like interest rate markets and the like, I think it's very positive that there is actually that competition, because it creates a level of redundancy and resiliency in the system, right? The fact that you don't have a single player, so for example, like interest rate swaps, a single player like Pendle, that is the only one that actually operates across that space. That means that also there is a level of redundancy and resilience in the system, that if one, for any reason, gets exploited, has a huge exploit and actually blows up, there are others to take up the load, and the system is resilient and actually keeps maintaining and still producing the same instruments, so long as people are just not forking each other and kind of like doing exactly the same thing for us, right? But assuming that there's enough, strong teams actually building some of that resilience, that actually the market it sustains itself.
Yeah, that's certainly a lot of lessons to be learned there. We're going to dive more into that in future episodes, and we'll have to get you back on maybe next time in the studios when you're up in Sydney next. But right now, thank you so much for your time.
Awesome, man. Thank you very much.
That was awesome. So thanks to Will for joining us for this podcast. We'll see more new guests on the future episodes, and we'll bring Will back to get more of his perspectives in the DeFi space and other things that he's working on in the RWA tokenization space. I'm Mark, your host. Thanks for tuning in to FEX Insights episode 12, and we'll see you next week.